So we are currently on the weekly time frame right here. As you guys can see right here, we are currently on the weekly time frame. So the reason why I entered for this trade was that I saw that after a break of a high, we are also expecting a pullback, which means we have our impulse move and our correction move. As I have taught you guys, this was the correction move right here. So let me mark it out guys for you guys to see. There's a correction move right here coming. There's a correction move right here, a correction move. So there's an impulse move to the upside. So what I see expecting is a correction move to the downside again, then before the impulse move to the upper side. So basically, when this candlestick came out, I saw that this candlestick, there was a huge momentum in the market, which means that there is an imbalance right here. That price need to fill this imbalance before we can get in for a trade. Imbalance also means liquidity. There's liquidity being built up in this candlestick right here from the lower time frame, for that price need to take out before we can be looking for our entry model. So this is where our entry model comes in place. What do we see right here? We saw that when this candlestick came out, this huge big bullish momentum candlestick from the weekly time frame came out, it took out this high, giving us a break of a high, then one, taking out this high, two. So we are getting our multiple break of structure. We are trading continuation, not reversals anymore. Continuation with the higher, which is the higher time frame trend direction. So this is our multiple break of structure. Our multiple break of structure right here. So before we can trade the continuation trend direction, what we have to look for is a multiple break of structure to trade continuation. Then our inducement is the first value pullback that happened after a market structure shift or a multiple break of structure. So which is our inducement right here? When this candlestick right here closed, this second candlestick that gave us this candlestick with retracement to the downside right here is our inducement. As you can see right here, this candlestick right here is our inducement, because it was the first value pullback that happened after a market structure shift or a multiple break of structure. So we also saw that when this candlestick gave us this, we got our inducement. This other candlestick gave us the pullback to the downside right here. Went back up, but it didn't take out this liquidity. It just came, pulled back to this downside, went back up, and price came, cleared this liquidity right here. So when price clears liquidity, we saw our POI right here from the higher time frame. So there must be a market structural shift or a multiple break of structure. So let me bring out my rules out for you guys to see. There must be a market structure shift or a multiple break of structure. Let me bring it out for you guys to see. Okay, I'm coming. So right here, what do we have? We saw right here that our rules of picking a point of view says that there must be an MSS or a multiple break of structure. Sorry, I just changed my pen. So we saw that there must be an MSS or a multiple break of structure. What do we have right here? A multiple break of structure. We saw that this high right here was taken out, this high right here was taken out, this high right here was also taken out. Then the rule of picking a point of view the rule 2 says there must be an inducement or liquidity protecting it. Right here, I made a mistake right here. There must be a liquidity or inducement protecting it. So which one is our inducement? Our inducement is the first value pullback that happened after a market structure shift or a multiple break of structure. So we have gotten our inducement right here. We have gotten our market shift. We have gotten our inducement, which is this first pullback right here. Then it said your point of interest, your POI should be unmitigated. Then so that when this inducement came out, it mitigated this zone right here, this candlestick zone, this candlestick wick, also mitigated this zone right here, and it also mitigated this zone, which means these three POIs are automatically disqualified for us to pick as our entry. So what do we see right here? And there's also a rule that says if you have a point of interest right here and the candlestick wick is longer than the body, you should pick your point of interest from the body. And even if your inducement touches the wick and the body closure of the candlestick is small, you can pick your point of interest from the body of the candlestick right here. So I know that you guys might not be hearing me clearly now. You guys should bear with me. It's because of the rain, there's a heavy rain downpour right here. Rain is falling heavily right here, so you guys should bear with me. So back to what we're saying, this is our point of interest right here, because this inducement right here did not mitigate this candlestick body, which is also means that it's valid for us to pick up for as our point of interest. So we won't just jump in for a trade right here. We have to go down to the lower time frame to look for our analysis to trade, for our market structure shift for reversal concept, which means from the lower time frame we have to trade our reversal concept. So what do? We go down to the 1 hour time frame, which is time frame I got the analysis from for the first place. So this was the POI right here. This is the POI right here I marked from the lower time frame. Then this is the POI I marked from the higher time frame. So what we have to do now is to look for our reason for entry the trade. So before that, let me shrink my chart so that you guys can basically see what I'll be doing. So we saw that where price was approaching our point of interest, it was giving us a pattern. Which pattern was it giving us? A lower high, then a lower low, a lower high right again, then a lower low, a lower high, then a lower low right here, and a lower high, a lower low, a lower high, giving us a lower low, a lower high, then a lower low right here, then a lower high, also a lower low. So when this move happened to the upper side, we saw this candlestick right here took out this side, which means officially that zone we picked from the markers from the higher time frame is confirmed that we can pick a point of interest right here, because we have gotten our market structure shift. Then this is where our rule of picking a point of interest will come in again. So we also got that we saw that there must, before we are in the higher time frame, we are trading continuations, which is the weekly time frame, because you can't be placing, except you are a swing trader. For me, as I'm a day trader, so I pick my point of trade from the 30 minutes, the 45 minutes, and the 1 hour time frame. So which means I'm going to be taking this trade as reversals, because I'm not a swing trader. So what do we see right here? We saw that price gave us a market structure shift. Rules of picking a point of interest. Rule 1 says there must be a market structure shift or a multiple break of structure. So since this is continuation trend, we are to be trading a market. Since this is a reversal trend, we are to be trading a market structure shift. What do we have right here? We saw an MSS right here. We saw where did this candlestick close? This candlestick close out this high right here. This was where the candlestick closed out. So we have gotten our market structure shift. Then our inducement. What is our inducement? Our inducement is the first value pullback that happened after a market structure shift or a multiple break of structure. Since we are getting our market structure shift, we should be focusing on market structure shift. So we saw this one as our inducement because it was the first value pullback that happened. Why is it the first value pullback? We saw that when this candlestick closed above this high, giving us our market shift, this is the candlestick that came out. It closed above this high. It gave us this pullback to the downside before it came to the upside, closing above this high, giving us a market, our pure inducement, which means our inducement has been secured. Then rule 3 says your point of interest should be unmitigated, which means the inducement should not mitigate your point of interest. We saw that this inducement right here mitigated this zone. That's why we picked this OB from the 3 hours time frame as I picked my other block from 3 hours time frame as my point of interest. So your POI should be unmitigated. Pick the point of interest closer to your inducement, which is this OB right here. Since this zone has been mitigated, this point of interest is right here, this other block right here. So that was why I picked this zone as my entry for my entry. And as you can see, price is currently reacting from this zone. Came down, we were in a little bit of drawdown, but now we just got out of drawdown and we are just breaking even right here. So I know that with time, because I'll be swing trading this trade. I'll be holding this trade for a long time to see what the market will officially give us as our reward for holding. So we have gotten our confirmation. The confirmation we need for us to enter our trade. All we have to do is, as we execute, we should stay patient for the trade to play out. So I hope you guys learned anything from this video, and if you don't learn anything, please comment down below what are your thoughts about the video, and comment down below what type of content you want me to upload for the next time for my videos for you guys to see. So without further ado, have a nice night and have a nice day wherever you are watching from, and remember, don't forget to subscribe, like and comment. Peace.